So the story that we've been telling for this year actually is one of a bit of a tug of war going on between the fundamentals, which have shaped up largely as we've expected. Growth has been good in the US and around the world. Earnings has been stellar here and around the world as well, while we have sentiment really being weighed down by a lot of these trade tensions. So we've seen a lot of multiple contraction here and around the world, and we have seen that associated dollar strength. So we've been telling investors to focus much more on the fundamental picture. In terms of buying opportunities, I think we've come a long way here in the US, but that sentiment is still very, very negative around the world. So if we're speaking to investors who are still very allocated to the US, the buying opportunity we see very much is actually in things like emerging markets in Europe, which are still very much weighed down by the cloud of
in other words,
uncertainty.
I mean, just to put that in a concise term, yeah, it's too late.
No, it's not too late. I mean, we don't think this is it for the market, that we're up 10% and now it's all downhill from here for the next few years. Not at all.
It's just not the best place.
I just think it's a matter of your starting point, right? If you're starting from a portfolio that's already heavily invested in the US, perhaps you take a little bit off and allocate a little bit more to international.
Terry, what do you think?
Well, I think, we look at things a little bit more tactically, so we're looking at what's going on currently. And when I look at the markets, I don't think that we're in a melt-up to touch base with what we were talking about earlier. In fact, the last time I heard that was back in January. And it's been trendless volatility was all we were talking about through the second quarter, and that's certainly shifted more recently. And if we want to participate in those trends, which we do, we're comfortable right now being long in the markets. But we are looking to see what could shift that going forward and make sure that we get out of the way before it's...
What do you think could?
I think that, it's hard to say exactly what could, but there's four things that we are looking at. I think that the stock market sniffs out a recession before economists do. Being a classically trained economist, it's hard for me to say that, but the stock market sniffs that out, and I think the bond market even sooner than the stock market. So there's four, I guess, horsemen of the apocalypse, that is like what I like to call them, that could potentially kill this market. The first and foremost being that inversion of the yield curve that we've talked a lot about. You've talked about a lot about that on this show, as well as if there was a dent in consumer confidence or leading economic indicators or housing starts. Those are the four. If we see 2 to 3 of those, I think that's a problem. Otherwise, we're comfortable riding these trends.